Hello and thank you for joining our weekly mortgage rate segment. I'm Megan Abdelaziz, realestatesiny.com's mortgage reporter. The mortgage rates have increased yet again this week, but by a larger scale than we have been used to lately. The 30-year fixed rate moved up to 3.99%. The 15-year fixed rate moved up to 3.21%, and the 5-year adjustable rate moved up to 2.81%. These increases came from the increase in the yields on the 10-year U.S. Treasury bonds and the mortgage-backed securities. The 10-year U.S. Treasury bonds yield increased from 2.02% last week to 2.15%, and the mortgage-backed securities yield increased from 3.19% to 3.53%. The increase in these yields is due in part from the Federal Reserve Chairman Ben Bernanke's speech to Congress and the Federal Open Market Committee meeting's minutes about the quantitative easing program. The Federal Reserve's quantitative easing program is supposed to help keep the rates low, but investors rely more on what the Federal Reserve actually says. So when some contradictions had come out between what members were saying, people weren't sure of what to do. At the end of last week, the stock markets had gone back down below where they had closed on Wednesday, May 22nd, and didn't come back up until the opening of the stock market on Tuesday, May 28th. Just to recap, the Dow Jones closed at about 15,300 and the S&P 500 closed at about 1,650 that Wednesday. Promptly after the opening of the stock market on Tuesday, May 28th, the Dow Jones shot up to slightly over 15,400 and the S&P 500 went up to about 1,660. Another aspect that shows an improving economy was from Moody's Investors Service. On Tuesday, May 28th, Moody's Investors Service had updated the U.S. banking system's ratings as being stable. This was the first time since 2008 that they had updated the ratings, and it was updated for the improving economic data being released. A nice holiday weekend may have helped push Americans' confidence back up. This was shown not only in the stock market, but in Gallup.com's economic confidence report that was released on Tuesday, May 28th. Gallup's weekly average for economic confidence index last week was at -6, compared to the -5 it was at 2 weeks ago. This may not seem so great, but their daily poll has a better outlook on the situation. At the end of last week, the daily economic confidence index was at -7, and after the weekend, it was up to -5. The 3-day holiday weekend gave Americans a breather, and they came back just as strong and optimistic as they were at the beginning of last week. Mortgage rates are getting hot, along with the weather, but let's hope for a cool down with the rates in the coming weeks. Make sure to check out our mortgage blog each week on trendingsiny.com to see where the mortgage rates will move to next, since they are always volatile. Thank you for watching, and be sure to like us on Facebook, follow us on Twitter, and follow our blog at trendingsiny.com. Once again, this is Megan Abdelaziz with realestatesiny.com.